It's going to happen to all of us. So in a way, it's reassuring to take a clear look at what will happen to our money and assets when we die. But it can be hard to accept that a lot of your money may not reach those you love because of inheritance tax or IHT. However, you can reduce and even avoid paying a lot of inheritance tax with careful estate planning and expert advice. Taking full advantage of all the allowances, exemptions, tax-free gifting and trusts can help. In the 2021-22 tax year, inheritance tax brought in nearly £6 billion of revenue, up over 500 million on the previous tax year. The basic rule for how much you owe is that the first £325,000 of your estate is tax-free, and then any assets from property, money, or valuable art or jewellery will potentially be liable to 40% IHT. To help you start planning ahead, here are the top 5 things to know about IHT and how to avoid it. Firstly, preparing for inheritance tax can change your future. Very few people know every rule, exemption and allowance or how to use them. Knowing when to start planning is key. Start when your savings and assets begin to accumulate. Then, getting your head around how the IHT thresholds work can easily minimise a big chunk of your likely IHT bill. For a start, the first £325,000, known as the nil rate band, is tax-free. You can carry this over to a spouse or civil partner, so that when they die, the first £650,000 of your estate will be tax-free. Also, your tax-free threshold increases to £500,000 if you leave your home to your children, stepchildren or grandchildren, subject to your estate being less than £2 million. Gifting is a simple way to mitigate IHT. You can give away up to £3,000 each tax year, known as your annual exemption, as well as make any number of small gifts up to £250 per person. Almost all gifts, however large, become IHT exempt if you survive for 7 years after the gift was made. Use pensions to help with IHT planning. Most defined contribution pension schemes will fall outside of your estate. So if you're looking for a tax-efficient way to pass on wealth, pensions could play a big role. Lastly, trusts are a tried and tested tool in IHT planning, and they're still a good way to make sure the right people get the money and assets you want them to have. I hope this helps you to navigate the complex rules of IHT and make sure that as much of your money and wealth as possible reaches the people you want it to. Thank you for watching.